If you're like most Americans, you get a little nervous when you think about the fiscal trajectory of our nation. We're already at $36 trillion of debt, and that's projected to grow to $54 trillion by 2034. If Trump ends up extending the 2017 tax cuts, and he almost certainly will, experts are saying that could add another $5 trillion to that total. The truth is, regardless of which party's in power, we spend money like drunken sailors, and the fiscal outlook for our country is growing more perilous by the year. A recent study out of Penn Wharton predicts that if we don't right our fiscal ship of state by 2040, no combination of raising taxes or cutting spending will arrest the financial collapse of our nation. And here's the thing. Very few experts believe we are likely to cut spending. They instead believe that will eventually raise taxes, and in dramatic fashion. Former Comptroller General of the federal government, David Walker, says we may have to as much as double tax rates within the next 10 years in order to keep our country solvent. So knowing that we could be facing a tsunami of higher taxes down the road, what exactly can you be doing in 2025 to best shield your retirement savings? The best approach is to create a balanced, comprehensive strategy that takes advantage of all the nooks and crannies in the IRS tax code. And given that Trump is almost certainly to extend his tax cuts for another 8 years, at some point this year, you'll have an unprecedented opportunity to prepare for the coming onslaught of higher taxes. Remember, the cost of getting money into tax-free vehicles is you have to be willing to pay a tax. The next 9 years between now and 2034 represent an historical opportunity to pay those taxes while they're on sale. So what exactly does a balanced, comprehensive approach to tax-free retirement look like in 2025? It means incorporating as many as 6 different streams of tax-free income, none of which show up on the IRS's radar, but all of which contribute to you being in the 0% tax bracket. Why do I make such a big deal about being in the 0% tax bracket? Because if tax rates double, as many experts are now predicting, 2 times 0 is still 0. Before I identify these 6 streams of tax-free income, let's define what qualifies as a true tax-free investment. A true tax-free investment meets the following requirements. First, it's truly tax-free. That means that you don't pay federal income tax, state income tax, or capital gains tax. That eliminates municipal bonds right off the bat. While municipal bonds are free from federal tax, you could pay state tax, and if you buy them in the form of a mutual fund, you could potentially pay capital gains tax as well. The second thing I'm looking for in a true tax-free investment is that when you take distributions, they should not count as provisional incomes. That means they don't count against the thresholds which cause Social Security taxation. By the way, municipal bond interest does count as provisional income. Lastly, with a true tax-free investment, distributions don't affect IRMA. That stands for Income-Related Monthly Adjustment Amount. In layman's terms, that means it shouldn't count against the income thresholds that could potentially increase your Medicare Part B and D premiums. Once again, municipal bond interest does count against IRMA thresholds. One last thing before I dig into each of the 6 tax-free investment tools you should be using in 2025. I'm including all of them as part of your potential tax-free retirement planning strategy because they all have unique qualities that set them apart from the others. They all have unique benefits that justify their inclusion in your retirement approach. They all take advantage of a different section of the IRS tax code. The first truly tax-free retirement account you should be contributing to in 2025 is the Roth IRA. You can contribute $7,000 per year if you're younger than 50 and $8,000 per year if you're over age 50. Also keep in mind that your ability to contribute to a Roth IRA phases out between $236,000 and $246,000 of modified adjusted gross income. The thing that makes Roth IRAs unique, the thing that none of the other streams of tax-free income can do, is it gives you 100% liquidity on your contributions. Whatever you put in, you can take right back out, no strings attached. The second truly tax-free account you should be considering in 2025 is the Roth 401k. You can contribute $23,500 if you're younger than age 50 and an additional $7,500 if you're over age 50. Unlike the Roth IRA, the Roth 401k has no income limitations. But that's not the thing that makes it unique. The thing that makes it unique and impossible to ignore is the potential for a company match. That's free money and an instant return on your investment. None of the other tax-free alternatives can provide it. The third truly tax-free alternative you should be considering in 2025 is a Roth conversion. If you believe that your tax bracket in the future is likely to be higher than it is today, and there's excellent reason to believe that, then you should systematically reposition your IRA or 401k to tax-free. Like I said earlier, Trump is likely to extend his own tax cuts sometime this year, year, which will give you 9 full years to take advantage of historically low tax rates. You'll want to convert that money slowly enough that you don't rise into a tax bracket that gives you heartburn, but quickly enough that you get all the heavy lifting done before 2034, when tax rates are likely to skyrocket. The thing that makes Roth conversions unique is that there are no limits on how much you can convert. Mitt Romney is purported to have over $100 million in his own personal IRA. If he were so inclined, he could convert every last dollar of it to Roth all in 1 year. None of the other tax-free alternatives give you this kind of firepower. The Roth conversion should be the main workhorse in your tax-free retirement strategy, particularly if you have substantial wealth in your IRA or 401k. The fourth stream of tax-free income, believe it or not, is your IRA or 401k. Remember, if you retired today, absent any other deductions, the IRS would give you a deduction. It's called the standard deduction. For a married couple retiring under age 65, the standard deduction is $30,000. That means you could experience income from any number of sources up to $30,000 without paying any taxes at all. The key here is to have a balance in your IRA or 401k low enough that required minimum distributions at age 73 are equal to or less than your standard deduction, but also low enough that they don't cause Social Security taxation. More on Social Security taxation here in a minute. For married couples, this ideal balance is around $350,000, and for single filers, it's about half that amount. Tax-free distributions from your IRA or 401k are unique because you got a deduction on the front end, grew the money tax-deferred, and then use your standard deduction to take that money out tax-free in retirement. None of the other tax-free alternatives we'll talk about today can do that. That's why I like to call this particular tax-free alternative the Holy Grail of financial planning. The fifth tax-free alternative you should consider taking advantage of in 2025 is what I call the life insurance retirement plan. This is a cash value life insurance policy alternative that allows you to mimic a lot of the tax-free benefits of the Roth IRA without any of the limitations. But the real benefit of this particular alternative is that it has a death benefit component that you can receive in advance of your death for the purpose of paying for long-term care. And if you die peaceful in your sleep 30 years from now, never having needed long-term care, then someone's still getting a death benefit, probably your kids or your grandkids. So there isn't that sensation of having paid for something you hope you never have to use. By the way, there is a cash value component that you can access tax-free along the way to supplement all the other tax-free streams of income we just discussed. What makes this tax-free alternative unique? None of the other options allow you to receive a death benefit in advance of your death for the purpose of paying for long-term care. This is a benefit that's unique to the LIRP. The sixth stream of tax-free income you'll want as part of your tax-free retirement strategy in 2025 is tax-free Social Security. If you recall, at the beginning of the video, we said that if you don't keep your provisional income levels in check, you could end up paying tax on your Social Security. Well, by incorporating the 5 streams of tax-free income we've discussed thus far, you can stay below those provisional income levels and receive your Social Security 100% tax-free in retirement. And tax-free Social Security is unique because it shields you from tax rate risk, inflation risk, long-term care risk, sequence of returns risk, and longevity risk. In summary, if you want to shield your hard-earned retirement savings from the impact of higher taxes in 2025 and beyond, you'll need a balanced, comprehensive approach that takes advantage of every nook and cranny in the IRS tax code. I recommend a strategy that incorporates as many as 6 different streams of tax-free income, none of which show up on the IRS's radar, but all of which contribute to you being in the 0% tax bracket in retirement. I'm talking Roth IRAs, Roth 401ks, Roth conversions, RMDs offset by your standard deduction, the life insurance retirement plan, and if you can keep your provisional income low enough, then your Social Security will also be tax-free. And that, folks, is enough to put you in the 0% tax bracket in retirement. And why is the 0% tax bracket so important? Because if tax rates double, like many experts are now predicting, then 2 times 0 is still 0. I'm David McKnight. Thanks for watching.